In this topic, we will learn about taxes in general, the administration of tax system, and the tax scheme, and our tax laws. So we start first in our taxes. So what is a tax? A tax is an enforced proportional contribution from the persons and property levied by the lawmaking body of the state. So here in our tax, what happens here now is the amount of this is already the amount or the tax due that we pay to the government. So remember, we have your state, which creates your tax laws. Your tax laws now will impose taxes to subject matters. So these subject matters can either be persons, property, or rights, or privileges. Now, by virtue of the tax law, these persons, properties, and rights or privileges, we will pay tax. So this tax now is the amount collected by virtue of the tax law. Okay, so it is the amount collected by virtue of the tax law. Now, we try to look as to the difference of taxation and tax. So what is the difference between taxation and tax? So taxation is the process of enforcing proportional contribution against a person's properties, while tax is the contribution. So taxation is the process to impose tax. Tax is the amount of the contribution or the amount collected by the state against the different taxpayers. Now, after learning your taxation and tax and what is tax, we look as to the characteristics of taxes. So what are the different characteristics of taxes? So the first one is, it must not violate tax limitations. So when we say it must not violate tax limitations, remember, our tax law is limited by inherent and constitutional limitations. So our tax is limited by inherent and constitutional limitations. Okay, so we, if ever there is a tax that needs to be paid, if there is a tax that needs to be paid, it is limited by our inherent and constitutional limitations. It is limited by the inherent and constitutional limitations. Now, next item, it must be generally payable in money. So we said before that your tax must be paid in money. It must be paid in money. So it cannot be paid otherwise or other than money. Therefore, guys, if we pay our taxes, we need to pay in cash or its equivalent, or we can issue check. However, guys, we also learned before that even though taxes are generally payable in money, there are instances under our tax code that requires or that can, as a remedy of the government to collect taxes, the government can levy or distribute a property. So instead of paying the tax by virtue of cash or cash equivalent, the tax is now paid by the property levied or distributed. So that's an exemption. But the rule is it must be payable in money. Next, characteristic of tax is it is exclusively levied by the legislative body. It is exclusively levied by the legislative body. When we say it is exclusively levied by the legislative body, the power to tax is within the legislative. So it is within the Congress, and we learned that in our last topic before. However, we have an exemption to this. So what are the exemptions? First is the power of the president to impose tariff, taxes, or customs. Next, the power of the local government units to impose local taxes. And last one, we have your administrative implementation of the tax law. So what do we mean by administrative implementation of tax law? When we say administrative implementation of the tax law, again, the BIR or the admin is tasked to implement the general law. What is our general law under taxation? That is the National Internal Revenue Code or the tax code. Next, it is assessed in accordance with some reasonable rule of apportionment or ability to pay principle. You already know this one. This is in the form of your equity and uniformity, so ability to pay. Next, it is imposed by the state within its jurisdiction. Why is your tax imposed by the state within its jurisdiction again? Because tax is territorial. Tax is territorial. So you can only impose it within the limits and bounds of your territory. Next, it is levied for public purpose. It is levied for public purpose. Again, we impose tax for public purpose. We impose tax for public purpose. Okay, so it cannot be for the benefit of private persons or for any private interest. It must always be imbued with public interest. Okay, so after we know the characteristics of taxes, which is only reminiscent of what we have discussed before in your characteristics of taxation. When you say characteristics of taxation, the characteristics of the process of taxation. If we talk about characteristics of taxes, this is the characteristic of the amount we pay. Okay, so I hope you are not confused regarding taxation and taxes. We go now to the different classifications of taxes. So we have different classifications of taxes. So I think we have 5 classifications or 6 classifications. So we start first with the classification of taxes as to subject matter. So when we say classifications of taxes as to subject matter, this classification pertains on who or what is tax. Who or what is tax. So who is tax or what is tax. So if the tax, the classification is personal tax, what is tax here in our personal tax are persons. What is tax here in personal tax are persons. While in your property, of course, property. Property tax, what is tax is property. So your example of personal tax, one common example is your cedula or your poll tax. How about your property tax? One example is your real property tax. It is a tax subject is the property or the real property. Excise tax. When we say excise tax, what is the subject matter of the tax? If that is in excise tax, the tax is on the privilege or occupation. The tax is on the privilege or occupation. So, sir, examples of excise tax. So some examples of excise tax is income tax, of course. Sir, why income tax? What is tax here is your occupation. So by virtue of your occupation, you earn an income. By virtue of your occupation, you earn an income. Another is your estate and your donor's tax. So what is an estate and donor's tax? So this is a tax on the privilege to transfer property from one person to another. So this is a tax on the transfer of property from one person to another. Okay? From one person to another. Okay, so sir, well, are they the same, estate and donor's tax, since they are both tax on transfer? No, they are different because the privilege that is taxed, although the same, the burdens or incidents, the burden or the incidents happens differently between estate and donor's tax. So under estate tax, there is an estate tax upon the death of the decedent. Sir, what is a death of decedent? What do we mean by decedent? A decedent is a person who died, which leaves a mass of property. So, for example, mayaman ka, namatay ka, yung mga naiwan mong property, may mga naiwan kang property, yung tawag sa'yo ay decedent. Ngayon, ano mangyayari ba dito sa estate tax? What is tax is the transfer of property. So, it is a transfer of property during death. So, because of your death, your properties will now be transferred to your heirs or mga tagapagmana. So, you will transfer your property to your heirs. The transfer of property from the decedent to the heirs is taxed under estate tax. How about donor's tax? A donor's tax is a tax on donation made during the lifetime. Made during the lifetime of the donor. Okay, so here, there is again a transfer of property. However, what is taxed here is a donation that is made during the lifetime of the donor. That is made during the lifetime of the donor. We call it donor's tax. Next, custom tax. What is the subject matter under your custom tax? Of course, your customs, that is the import and export of merchandise. The import and export of merchandise. Okay, so as the subject matter, we classify it on who or what is tax. Personal tax, what is tax? Persons. Property, property. Excise, privilege or occupation. Customs, the import or export of merchandise. Another classification of taxes is as to burden. So when we say as to burden, who actually pays the tax? Who actually pays the tax? And we have here direct tax and indirect tax. And in knowing the classification of tax as to burden, we need to determine the incidence and the burden of taxation. So when we say incidence, who is liable to pay tax? Who is liable to pay tax? And burden, who actually paid tax? Who actually paid the tax? Okay, if the incidence and burden is within the same person, if the incidence or burden is within the same person, we call that a direct tax. So, for example, if I am liable to pay tax and I was the one who paid my tax, that is a direct tax. So, example, income tax. An income tax is a direct tax. Whoever is liable to pay the tax is the one who should pay the tax. You cannot transfer it to another person because taxes are non-assignable. How about an indirect tax? An indirect tax. The incidence is on one person and the burden is on another person. The incidence is on one person and the burden is on another person. So what happens here is one person is taxed. However, he shifts his taxes to another person so that the other person will pay the tax. So for example, if one is taxed, so one is liable to pay. However, he shifts his tax to one. One daw, plus one ulit. So Pedro naman. So he shifts his tax to Pedro. Now Pedro is liable to actually pay the tax. So the actual payment of tax is made by Pedro. So, sir, what is an example of an indirect tax under Philippine context? That is your VAT. An example of indirect tax under the Philippine context is your VAT. So, under your VAT, guys, what happens in VAT is that the seller passes the VAT to the buyer. So, the seller passes the VAT to the buyer. Sir, what is VAT? Value-added tax. A value-added tax or VAT is a tax on consumption. Sir, what is a tax on consumption? When we say tax on consumption, this is a business tax. This is due to the purchase and the selling of a particular merchandise. So if you are under VAT, so we have your business tax. There is two main category of business tax. That is your VAT, value-added tax, and your other percentage tax. Both VAT and other percentage tax is a tax on consumption. They are both tax on consumption. However, a VAT is a tax on consumption of a VAT taxpayer. Sir, what is a VAT taxpayer? A VAT taxpayer is a taxpayer registered under VAT. A taxpayer registered under VAT. So if you are a VAT taxpayer, meaning you registered under value-added tax. If you are paying other percentage tax as a business tax, it means that you are a non-VAT taxpayer. It means that you are a non-VAT taxpayer. So there is still a tax on consumption, however, it is non-VAT. So what happens here again, guys, is there is a transfer from the seller to the buyer. So kung napapansin nyo yung mga binibili nyo, tapos bumili kayo doon sa mga VAT registered na taxpayer, may nakikita kayo doon na input VAT or output VAT or VAT, gano'n. So that VAT, ang magbabayad dapat ay si seller, kaso pinas niya sa'yo na buyer. So instead of the seller who's paying the tax, who actually paid the tax is the buyer. Okay? So if ever we classify taxes as a burden, we look at it either as direct or indirect. Why is it as a burden? Because we determine who actually pays the tax. We determine who actually pays the tax. So we're done with the second classification. We proceed now to the third classification as to purpose. So if the classification of taxes is as to purpose, it means, guys, that this classification of taxes is in consonance with the purpose of taxation. It is in consonance with the purpose of taxation. Okay, so remember before, we learned that the main purpose of taxation is to raise revenue. Raise revenue. So if ever you say that the tax is a general tax, it means that the purpose of this tax, purpose of the tax is to raise revenue. So again, guys, what is the general purpose or the main purpose of taxation? We learned before that is to raise revenue to defray the expenses of the government. Therefore, if the tax is considered a general tax, the purpose of the tax is to raise revenue. How about if it is a special purpose? So remember, we have your other purposes. What are the other purposes? First is to regulate. First is to regulate. And the other purpose also is to achieve social objectives. To achieve social objectives. So under special, we call this one a purpose, or the purpose of the tax is to regulate. The purpose of the tax is to regulate. So we say that a special tax is also a regulatory tax. A special tax is also a regulatory tax, and a general tax is also known as your fiscal or revenue tax. How about your sumptuary? Under your sumptuary, the purpose of the tax is to achieve social objectives. So if we try to classify the tax under sumptuary, and the purpose of the tax is to achieve social objectives, then we call it sumptuary tax. Okay, so if ever we classify taxes again as to purpose, we look as to the purpose of the taxation. If the purpose is general, then the purpose of the tax is to raise revenue. If the purpose is special, the purpose of the tax is to regulate. If the purpose is sumptuary, the purpose of the tax is to achieve social objectives. So we're done discussing three classification of taxes. We proceed further and we go to your classification of taxes as to measure of application. So when we say classification of taxes as to measure of application, we determine the amount of tax. We determine the amount of tax. So what is the amount under a specific tax? If the tax is specific, then the amount is also specific or fixed. The amount is also specific or fixed. But if ever we classify the tax as ad valorem tax, we base the amount on a particular value. So when we say the tax is specific. Whatever is the amount of the income or whatever is the amount, the tax will be fixed. But in your ad valorem, the tax changes based on the value. Ad valorem, value, valorem. We add it to your value. We add based on the value. Kaya nga siya tinawag na ad valorem. So classification of taxes as to measure of application. Next, classification of taxes as to taxing authority. Classification of taxes as to taxing authority. So when we say classification of taxes as to taxing authority, who levies the tax? Who levies the tax? So if we try to know the classification of taxes as to taxing authority, we need to learn who actually levies the tax. So if that is a national tax, it is levied by the national government. It is levied by the national government. But if ever it is a local tax, it is levied by the local government units. Local government units. So what are the national taxes? So the following are your national taxes. So we use this mnemonic, DIDOV. So first we have your donor's tax. And then we have your income tax. And then we have your ST tax. And then we have your documentary stamp tax. We have your other percentage tax. We have your value added tax, and we have your excise tax. So we examine the different taxes one by one. So first, we have your donor's tax. So we already learned this a while back. A donor's tax is a tax on the donation of the property. The donation must be gratuitous, made during the lifetime of the donor. So there is a donation made during the lifetime of the donor. How about your income tax? This is a tax on income. So when you say tax on income, it is a tax on income, whatever source of your income, whether it is legal or illegal. Sir, question. So how can we tax an illegal income? So generally, guys, if you are a taxpayer, we have this pay as you file system. So when we say pay as you file, you are the one who pay your filing. So you file your tax, you compute your own tax due, and you pay whatever you computed. So if you have an illegal income question, will you still report that? No. But under the law, whether your income is legal or illegal, we need to tax it. Next, we have your ST tax. Next, we have your ST tax. So what about your ST tax? So under our ST tax, what happens here is we tax the transfer of property because of the death of the dissident. We tax the transfer of the property because of the death of the dissident. So the dissident died, and because of the death, there will be a transfer of property from the dissident to the heirs. Next, we have your documentary stamp tax. A documentary stamp tax is a certain tax on different documents. So that can be contracts, loans, agreements, etc. So these are tax on documents. So it is imposed so to make a legal effect on your documents. Guys, you will learn soon that if there is no documentary stamp tax on a particular document, it loses its legal effects. It loses its legal effects. So to legalize publicly the document, normally we place a DST. So example, in a sale of property, so there is a sale of property from one person to another. So to make or to take effect legally the deed of sale between the persons, you need to pay documentary stamp tax on that document. You need to pay a documentary stamp tax on that document. Next, we have your other percentage tax. What is your other percentage tax and VAT again? These are business taxes. Nasabi naman na natin kanina. These are tax on consumption. However, other percentage tax is a tax paid by a non-VAT taxpayer. It is a tax paid by a non-VAT taxpayer, while a VAT is paid by a VAT taxpayer. How about an excise tax, the last item? What is an excise tax? An excise tax is a tax on sin products. Tax on sin products. Please do not confuse yourself with excise tax according to the classification of tax as to your subject matter. But if we say excise tax as a national tax, it is a tax on sin products. So what are your sin products? Examples are automobiles, gas, what else? Cigarettes, alcohols. So those are different tax on sin products. Those are different tax on sin products. Okay, so we have DIDAV as your national tax. Okay, so DIDAV as your national tax. Now we go to your local taxes. So local taxes are levied by the local government units. So sir, why is there a local tax again? Because again, your tax law can be delegated to your LGU. Diba sabi natin, exemption to your exclusively levied by the legislature. Exclusively levied to the legislature. Exemption here is to your LGUs. So your LGUs can tax it. Your LGUs can tax. So examples are real property tax. Real property tax. So that is one common. What else? Cedula or your community tax. Another is, I don't know if you already met this. What do you call this one already? Professional tax. Professional. So no problem with the real property tax. It is a tax on the value of your real property. Next, we have your cedula. That is a tax on a person. We call this one your poll or capitation. Next, we have your professional tax. What is that professional tax? That is a tax on your exercise of profession. Normally, this is evidenced by a professional tax receipt. Professional tax receipt. So annually, you pay this one and you will receive a PTR. Without a PTR, you cannot exercise your profession. So, yeah, PTR. Next, classification of taxes. We have your as to rate, as to rate. So this is the sixth item under your classification of taxes. So the last classification as to rate, we look as to the movement or the relation of the rate as to the amount. So the movement of the rate. If it's a progressive tax, the rates are increasing. So pataasing rates. If it's a regressive tax, the rates are decreasing. And if that is a proportionate tax, the rates are stagnant. But if it is a mixed tax, the rates are a mixture of the three. It is a mixture of the three. So progressive, regressive, and proportionate. Okay? So we discussed 6 classifications of taxes. We started from subject matter, and then we went to your burden, and then we went to your purpose, measure of application, as to taxing authority, and as to rate. And after knowing the different classifications of taxes, we go now to differentiate the different impositions other than tax. So these are different impositions other than tax. So we have items A to L. So we start first with toll. So what is a toll? A toll is a fee charged on the use of a property. Fee charged on the use of the property. So what is this fee? So what is this fee? So this fee normally is tax on, no, it's not actually tax. This fee is usually used on your different public-private partnerships. So, sir, what is this public-private partnerships? I don't know if you ever heard of it already, PPP or a service concession arrangement. So, in a service concession arrangement, what happens here is the government will enter into a contract with a private entity. The private entity is a contractor normally, and that contractor will build in favor of the government. And under that, kasi after the contract, ang mangyayari is ibibuild ng private contractor. Tapos yung private contractor will operate that for a certain period of time. After the operation on a certain period of time, the ownership will now be transferred to the government. So we call that private-public partnerships or your service concession arrangement. So that is a toll. So example are your toll fees in your SC text. What else? Toll fees on your different expressways. So yun yung main example natin sa toll. Next, we have your penalty. Penalty. So under your penalty, what is this? A penalty is a punishment for the commission of a crime. A penalty is a punishment of a commission of a crime. So when we say commission of a crime, we look at it as a criminal liability. So it's a penalty out of criminal liability. However, guys, under tax purposes, when we talk about penalty, we talk about your tax penalty due to non-payment of taxes. So it is more of a civil liability. Pero pagka tax out of criminal liability, so yan yung commission of a crime. Sir, how about a commission of a crime under our tax code? Still, it is a civil liability unless you are criminally chargeable. Unless you are criminally chargeable. Next, we have your compromise penalty. So, what is a compromise penalty? So, under your compromise penalty, guys, what happens here is that we try to agree with a compromise as to the amount of the tax or the penalty. So we try to lessen the amount of penalty. Lessen the amount of penalty. So under lessening the amount of penalty, we compromise. There is an agreement to lessen the amount of penalty, whether that is civil or criminal. But if it is compromise per se in taxation, so meaning there is a compromise under your taxation. So under your compromise on your taxation, what happens here is if there is a tax liability of a taxpayer, and the taxpayer is unable to pay due to financial incapacity. Okay. So guys, there is a power under our tax code in which the Commissioner of Internal Revenue can always compromise the tax due. So it can compromise the tax due under certain instances. So what are those instances? One is your financial incapacity. So under your financial incapacity, the taxpayer cannot really pay the tax due kasi wala na siyang pera. Kulang na yung pera niya. So that's one reason. So when we say we try to lessen the tax liability due to financial incapacity, so instead of 900,000, for example, you will lessen it up to 300,000. That is compromise under taxation. But if it's compromise penalty, what is lessened here is the penalty. In a compromise under taxation, what is lessened is the tax liability. Sir, when do we compromise again? We compromise only on certain instances. You will learn that in your tax 3. One is financial incapacity. Next, we have your special assessment. So what happens in your special assessment? So in your special assessment, you try to exact an amount from a private owner due to the increase on the value of its property by the improvements on a government property. So ito yan, ganito. So ito, government property. Ito naman ay private property. Tapos, dun sa government property, nagkaroon ng improvements. So, ang nangyari dun sa improvements ay, dun sa improvement, nag-increase yung value ng private property. So dahil dun sa improvement natin, nag-increase yung value ng ating private property. Why? Kasi for example, yung lugar mo ay liblib na liblib. Diba? Liblib na liblib yung lugar mo. Tapos nagkaroon ng SM malapit dun sa lugar mo. Ang mangyayari dyan, yung value ng property mo tataas, the fair value of your property will increase because of the improvement. Just like this one. Here lang kasi there is a government property. So the reason why the government assess you is because of the improvement made by the government. So because of the improvement made by the government, what happened to the value of the private property? The value of the private property increased. And the amount assessed against the private owner is called a special assessment. It's called a special assessment. Next, we have your license fee. License or fee. Normally, license or fee is used in the exercise of police power. So exercise of police power. So if ever we try to collect something out of the exercise of police power, we call them license or fee. So for example, license on your driver's license. So you pay a fee, you pay a license fee. Next, we have your margin fee. What is this margin fee? This is an exaction to stabilize the currency. So especially in cases of deflation or inflation, so that we stabilize the currency or purchasing power of our currency, we use a margin fee. Next, debt. So if we look at debt, this is a liability arising from a contract normally. However, debt per taxation is the debt tax liability. Debt tax liability. So what is this debt tax liability? This happens if ever a protest on an assessment reach final judgment in court. So a protest on assessment reach final judgment in court. So what happens here? So normally guys, kasi we can the BIR can just assess taxes against taxpayer. So the taxpayer can just be assessed. So halimbawa ako, inassess ako ng BIR ng 400,000. So kung tingin ko, hindi naman dapat ako ma-assess ng 400,000, pwede ko siyang iprotesta. Ano yung protesta? Protest. When we say protesta, hindi yung pupunta ka sa BIR at magwewelga ka doon. So yung protest na doon is a written protest disputing an assessment. So we try to dispute the assessment through the protest. So on your disputing the assessment, what happens here is it will first be held inside the BIR, so within the Bureau only, until it reach the Commissioner of Internal Revenue. And until it reach the Commissioner of Internal Revenue, there is a final assessment under you, assuming it is ruled against your favor. So, halimbawa, nag-rule na yung CIR, sabi niya, oh, liable ka naman talaga ng 400,000. Pwede mo pa ba yung i-protest or i-appeal? Yes, you can still appeal it in court. So if you appeal it in court, you will go to the Court of Tax Appeals, you will go to the Supreme Court. But before you go to Supreme Court, Court of Tax Appeals, and your Court of Appeals, and then Supreme Court. So you appeal it until there is a final judgment. And your final judgment is called your tax liability, debt tax liability, because of the judgment. Okay? So a liability because of your judgment in a tax case. Next, we have your subsidy. These are mainly used under agricultural sectors. So subsidy is a grant of money coming from the government. So the government subsidizes a particular sector, mostly the agricultural. Next, what is an impose? An impose is a tax or a duty. So this is more used on your duties or taxes. So, yeah. What is a custom duty and fee? A custom duty or fee is a tax on importation and exportation. So normally these are fees on your importation or exportation. So custom fees or custom taxes. Next, we have your tithes. What is a tithe? This is a to a contribution to a, what do you call this one? Religious sector. Religious sector. Okay? It is a contribution to a religious sector. So if ever we have a contribution to your religious sector, we call it tithes. How about a tribute? A tribute is an exemption from monarchy. Exemption because of monarchy. So it is exemption imposed by monarchs. Exaction imposed by monarchs. So is tribute still applicable here in the Philippines? I don't know. Maybe in Mindanao because they have their different sultans. So sultans can be considered monarch also in Mindanao. So maybe there is a tribute in Mindanao. I just don't know. Okay, so these are different impositions other than tax. So we already know what is tax, what are the characteristics of tax, and we consider the differences of your tax as to your other impositions.